So we had the volatility situation because of the bank's problems. And then at the same time, there was expiry in March. And as you know,
the big one.
Exactly. So we have the quarterly expiries where the futures expire. And this was like a combination, which ended up having at the exchange like the 3 biggest trading volume days in exchange history.
You're listening to IBKR Podcasts. Find more conversations at ibkrpodcasts.com. Please remember, any trading discussions are for information purposes only and are not intended to portray recommendations. Please listen to further disclosures at the end of today's episode. Now, welcome to our show.
Welcome to this IBKR podcast episode. My name is Edward Strauss of IBKR, based in our Swiss office, and today we want to explore international, or more specifically, European trading possibilities. With this, we're happy to have our guest, Eugen Mohr, who's been with the Deutsche Börse Group for over 16 years and is currently the Senior Vice President for Equity and Index Sales at Eurex, a leading European derivatives exchange, to speak about international, or more specifically, European trading possibilities. Thanks, Eugen, for joining us today.
Hey, Edward, thanks for having me. And also to the audience, a big hello. And I'm looking forward for our podcast today. Yeah, thanks. Maybe
Perfect.
Before I start, you made a little intro about myself. So 16 years with Eurex, having various positions at the exchange, working in the operations team, that's day-to-day business. Lately in the sales team, business development team. I've been in Chicago, in London, so having quite a good background about the exchange, I would say.
As you know, so IBKR, we're a global broker, right? And we are the professionals' gateway to the world's markets. So today, again, want to take that opportunity to speak a bit about the international opportunities investors may want to consider. Basically, U.S. investors are familiar with the Dow Jones Industrials, the NASDAQ and S&P 500 indices, but also the U.S. large cap brands and heavily traded equities such as Microsoft, Google, Tesla, and so on. There are also many large European or German companies such as Adidas, Mercedes, Deutsche Telekom, BMW, or SAP, but also other European global firms such as Shell or Nestle. These companies are also components of the major European indices. So for the German companies, this is the DAX, or the German stock index, or the European, the Europe 50 index. So can you give some more color as to the relative importance of the DAX and the Euro Stock 50 index for European or non-European investors?
Eurex is the biggest European derivatives exchange. We're headquartered in Frankfurt, so our mother company is Deutsche Börse Group. Deutsche Börse Group consists of the derivatives trading, but also cash trading, clearing. So we build up the whole value chain. Just to give the audience a little bit of background about where we are, who we are. In terms of the product portfolio, you mentioned it. One of our benchmark products is the Euro Stoxx 50, as you said it, considering or consisting of the 50 biggest companies in the Eurozone based on market cap. And from a German perspective, it's the DAX. The DAX is a well-known index. Previously, it was the DAX 30. Now, last year, the DAX has been added to 10 more shares to the DAX 40. And also here, that consists of the 40 biggest companies in the German region based on market share. Compared to the US indices, Germany is the largest economy in Europe. Therefore, also the DAX and in particular the Euro Stoxx is a very important trading product for us, especially the Euro Stoxx 50 future is actually the most traded future contract at Eurex. And this is one piece of our big product suite.
Okay, very good. Obviously, equity ownership and culture in Europe was not that developed just even a few decades ago. Can you explain the emergence of the European retail investor in the past decade? And basically, how is Eurex responding to their needs?
Mm-hmm. That's a great question. Everybody speaks about the increased activities of retail investors. Eurex itself historically was not a retail exchange. We were purely an exchange for institutional investors. Eurex is a relatively new company. We have been founded about 30 years ago in the early 90s. Back then, this was under the name DTB, Deutsche Terminbörse. And the special thing about DTB, Eurex, was that we have been the first fully electronic exchange. I mean, back in the 90s, even in the 2000s, there were a lot of pit trading on the established exchanges in the US, but Eurex never had a trading floor. Eurex was from day one a fully electronic exchange, and therefore we have a sort of pioneer rule in the exchanging world, driving the market and changing the market to create electronic markets, and being the leader on the forefront of the trading industry. So that's a little bit more on the background side.
No, you've always been known to be one of the more innovative ones out there, right? So, again, I understand that you spent about 4 years working for Eurex in Chicago, right? Can you compare and contrast the appetite from international investors for U.S. versus European investments? So, basically, how do U.S. and European investors differ? And if they do, why do you think that is?
That's another great question. But maybe I need to get back to the retail part, which I missed out previously. So, as said, initially, we are a pure institutional exchange, but given the demand from end clients, from smaller end clients into the trading segment, also Eurex, also here as a European innovator, was launching a retail initiative. The retail initiative itself was that we have broker agreements around the globe. I mean, Interactive Broker, for example, is a very important partner for us, and the focus on those broker agreements is on education to educate the end clients and to bring them on top of the product, and in particular also to update them on potential risks, everything related next to it. So this is an important topic. This is an important point on our agenda, and we continuously work on this. I mean, education is one part. The other part, of course, importantly, is also the product suite, of course. But when we look at the DAX is a relatively heavy product. I mean, the DAX itself has about 15,000 points, and the original DAX future contract had a contract value of 25 euros per point. That means when you trade one contract, this is 15,000 points times 25 euros. That makes it, in terms of trading, a very heavy product, and also in terms of margin requirements. And therefore, the exchange, in line with the retail strategy, we introduced smaller contracts with a reduced contract size. First, the mini DAX with a contract size of 5 euros, and 2 years ago, the micro DAX with a contract size of €1 per index point to fulfill the requirements of the market. When it comes for the needs of the customers, especially between Europe and in the US, I would say there are some differences. I would say, I mean, I said I was 4 years in Chicago, so I have a little bit of a background. I would say there are some cultural differences. I mean, Europe, or in Germany in particular, the German investors are relatively conservative. We still have, I think, in the whole Eurozone, the lowest number ratio of equity of stock investors compared to the amount of people who live in Germany. And we have the savings account is still like the most relevant investment that German investors are using. So that's because they're just very afraid of losing money, and that's why they go this conservative way.
We've seen the low interest rates over the last couple of years. Now things are rising, but even during the low interest rate periods, it's clear that there's a lot of the retail investors that are even stuck with their savings books. But going back to the Eurex products, I mean, we did, as you mentioned, Eurex is part of the Deutsche Börse group, right? That has the underlying, and a lot of those other products out there that try to give those investors the access to the indices, the different ETF products out there from the different providers. One has to know that those providers, the big guys, they're really going to Eurex to hedge themselves to do a lot of their main business, right? So I can imagine that. But basically, when traders or investors, they think of Eurex, they immediately think of the exchange as being sort of, quote, home to the institutional fixed income trading, right? We haven't talked about fixed income, but this is basically for the last 30 years. Can you explain a little bit the journey of the exchange? You had said before it started out as electronic, but why it's so entrenched in the bond markets?
Yeah, I mean, it all started, as said, in the 90s as a startup. And one of the first products that we had was the future on the German government bond, the Bund. We have 3 products on that. The Bund future, which is like the 10-year government bond, the Bobble, which is the 5 to 6 year. Yep. And the Schatz, which is the 2 to 3 year. Historically, also here in the 90s, the market in the government bond futures was in London on the live market. Those guys have been trading at the pit for a very long time. They had the book, they had the market. However, it was the goal from Deutsche Börse, DTB, to bring back the Bund to bring back home. And therefore we had the superior technology with all the advantages. No? I mean, you could execute the trades more efficient in terms of execution quality, in terms of pricing. I mean, a trade executed over an electronic platform was way cheaper than over floor trading. And therefore, this was a big move in the mid-90s. And we quickly, I mean, as said, with all the advantages, having a superior system, having the price advantage on the fee side, quickly we're able to migrate or bring back the German Bund future to Eurex. And this was like the first exclamation mark for Eurex.
I mentioned at the beginning of the podcast that it could be that some investors may not give that much thought to investing overseas because they just might not be familiar with it. That's obviously going back to the retail side. They might even not know where some of their favorite brands or companies are listed. So, for example, I had an acquaintance in the States that lives close to a large BMW plant in South Carolina. He wanted to invest in the company, but his U.S. online broker didn't offer the original share, but rather just the ADR. A lot of less liquidity and whatnot. Can you identify the challenges for investors investing overseas?
DAX consists, as said, of the 40 biggest German companies. There are brand names who the whole world names, especially on the car maker side, whatever, Mercedes-Benz, BMW, Volkswagen. So this is a selling argument for us to advertise our products in regions outside of Europe and in particular in the US. Investment in the US, however, is connected to a certain level of specialities. So when you would like to offer investment products in the United States, they need to go through the approval from the SEC. So this is from the equity side from the SEC, and for the future side from the CFTC. So this is the local regulator in the United States. And the United States regulators have certain level of restrictions in terms of what foreign investors can offer to clients in the US.
Right.
And for example, equity options, which fall under the SEC regime, unfortunately cannot offered to US investors. And also certain types of equity index futures, dependent if they are broad-based or narrow-based, are also excluded from product offerings. So we have limitations to offer our products, but the products we have, they are widely accepted, and we have an increasing market share in the US market because US investors also need to diversify their portfolios, and therefore Eurex is the gateway to the European market, to the German market, and therefore these products that we can offer are pretty prominent.
Well, obviously it's a derivatives exchange, right? So we're talking now for the Eurex point of view, it's the futures, the options, this kind of stuff, and that's clear that those can't be offered from the Deutsche Börse side. For the underlying, that U.S. investors can actually take advantage of that, having fulfilled all kinds of appropriateness checks and whatnot. Unlike other online brokers in the U.S. that have solid offerings in their home countries, IBKR offers access to stocks that in over 15 markets, 33 countries. Fees are transparently listed, and the currency exchanges can also be done with low commissions where the spread is not. But basically, going back to how Eurex and how it is a massive in the derivatives trading. Can you put some volumes into perspective for European traded products? Perhaps tell us about your biggest trading day or highest volume, or what happened on that day. I understand it was actually just recently.
Yeah, exactly. That's a timely question. We had in February, March, we had the turmoil in the banking sector with Silicon Valley Bank, with the takeover from Credit Suisse by UBS. I mean, these external market effects have an impact on trading volumes, of course. These market impacts affect volatility, and volatility, of course, at the end of the day, affects trading volumes. And on average, at Eurex, we're trading about 7 to 8 million contracts a day over the whole product suite. So that's equity product, index products, fixed income products, volatility products, dividend products. So about 7 to 8 million per day. However, in those volatile days, and here was one thing which needs to be mentioned. So we had the volatility situation because of the bank's problems. And then at the same time, there was expiry in March. And as you know,
the big one.
Exactly. So we have the quarterly expiries where the futures expire. And this was like a combination which ended up having at the exchange like the 3 biggest trading volume days in exchange history. So we traded, I think, over 20 million contracts a day versus the 7 million on a regular day. But since our system, and that's another thing to mention probably, Eurex is not only an exchange, also a software provider. So we developed our own trading platform. And since Deutsche Börse is, as I said, a software provider, we have a state-of-the-art trading platform. And even on those high load days where you have 20 million traded contracts, where you probably have hundreds of million quotes and trade updates, the system never ran out into any problems and could operate still under the lowest latency levels, which is in today's world for investors, for market makers, a very important factor to keep the latency low. But system proved even under high volatility days worked out perfectly.
Yeah, it is indeed impressive. And in looking at, some of the recent turbulence in the banking sector, we saw that although perhaps unrelated to the challenges U.S. banks are facing with rising interest rates, events in Europe, such as the recent Credit Suisse takeover by UBS, like how do events like this affect the volumes in the Eurex sector and indices? Or in this case, specifically, maybe the Euro Stoxx Bank Index?
Yeah, that's a good point. So next to the Euro Stoxx 50, which is the index for the 50 biggest companies in Europe, we're having sector products, sector indices. What is a sector index? The index provider Stoxx Contigo is calculating for every industry sector a separate index. So we're having the banking sector, we're having the automobile sector, we're having the chemicals, financial industry sector. And I think we're having about 24 different sectors. And of course, we're also having respective futures on it. What is the advantage of investing into sectors? I mean, diversification is key. And investors, professional as well as private investors, need to invest and diversify in certain areas. And therefore, investing in a well-diversified sector index is capital efficient and fulfills the requirement of the individual investor. Coming back to the banking sector index, it's called the FESB, the banks sector future, is one of our most liquid products next to the Euro Stoxx. Why that? Starting with the financial crisis in 2008, there was a high focus on the banks, and therefore also, and this explains the increasing volumes. Also, then, of course, need for such a future for investment strategies, but also for arbitrage strategies, and most importantly, also for hedging strategies. So the banking sector index is another innovation from the exchange. We're one of the first sector providers in the world here again. And we developed over time successful sectors and provide liquidity to the market in all those sectors.
No, I can appreciate that. I mean, you can see that having been innovative again, a lot of other competition out there probably try to copy it and emulate it, but obviously we know there's a lot of a good portion of the volume is on the Eurex, right? So
yeah,
good. Basically, finally, is there anything that you'd like to bring to our listeners' attention or anything important investors should be aware of or consider in addition to what we've discussed today?
Maybe to sum it up, I mean, as I said, Eurex was the first electronic exchange. So we are an innovator on the technology side, but also on the product side. I mean, we just elaborated the different products that we have. But another advantage, I would say, of a regulated exchange is just the fact that we are regulated by the local and the European regulator. So we have a reporting line to those regulatory bodies. And then on top of it, we have an internal surveillance team as well, which looks over the trades and which makes sure that the investors have a fair and orderly market. I think this is very important, especially in volatile times. And another advantage, I think, of a listed exchange like Deutsche Börse Eurex is just the fact that we have a so-called central counterparty system. Central counterparty is important when you have a defaulting member. because the central counterparty, the exchange, guarantees every buy trade and every sell trade. So if someone buys a future and someone sells a future, then those parties don't trade against each other. Everybody trades individually versus against the exchange. So the buyer trades against the exchange and the seller trades against the exchange. So the exchange guarantees payment and the delivery. And even if we have a default, like we had 2008 with the Lehman insolvency, then even those trades from the defaulting member are guaranteed by the exchange. Technically, it will be when a member is default, the member will be set to hold. All positions will be put into a exchange account, and the member will be liquidated as soon as possible. But very important, all trades stand and all trades are guaranteed.
Yeah, well, look, we're in that time again where obviously risk is on the high radar screen of everybody, and that's that does reduce a lot of the risk, right? And we know that with the sizes, especially on the institutional side, that's an important factor. Well, listen, Eugen, I appreciate you taking the time today to have this chat with me on the IBKR podcast, and thank you very much for your insight. I can imagine that the topic we covered may inspire some of our listeners who the investment possibilities in Europe, and I appreciate again your time. Thank you.
Exactly. Yeah, and also thank you for your time. And for interested investors, please visit eurex.com.
Thanks for listening to IBKR Podcasts. As always, we have more episodes at ibkrpodcasts.com. And if you're interested in learning more about interactive brokers, visit ibkr.com. We offer more trading education material, such as webinars at ibkrwebinars.com, financial and economic commentary at tradersinsight.news, market-related courses at tradersacademy.online, and quant-related articles at ibkrquant.com. The analysis in this material is provided for information only and is not and should not be construed as an offer to sell or the solicitation of an offer to buy any security. To the extent that this material discusses general market activity, industry or sector trends, or other broad-based economic or political conditions, it should not be construed as research or investment advice. To the extent that it includes references to specific securities, commodities, currencies, or other instruments, those references do not constitute a recommendation by IBKR to buy, sell, or hold such investments. The material does not and is not intended to take into account the particular financial conditions, investment objectives, or requirements of individual customers. Before acting on this material, you should consider whether it is suitable for your particular circumstances and, as necessary, seek professional advice. Trading on margin is only for sophisticated investors with high risk tolerance. You may lose more than your initial investment. For additional information regarding margin loan rates, see ibkr.com/interest. There's a substantial risk of loss in foreign exchange trading. The settlement date of foreign exchange trades can vary due to time zone differences and bank holidays. The interest rate on borrowed funds must be considered when computing the cost of trades across multiple markets. Any discussion or mention of an ETF is not to be construed as recommendation, promotion, or solicitation. All investors should review and consider associated investment risks, charges, and expenses of the investment company or fund prior to investing. Before acting on this material, you should consider whether it is suitable for your particular circumstances and, as necessary, seek professional advice. Futures are not suitable for all investors. The amount you may lose may be greater than your initial investment. Before trading futures, please read the CFTC risk disclosure. A copy and additional information are available at ibkr.com. Options involve risk and are not suitable for all investors. For more information, read the characteristics and risks of standardized options, or ODD, which may be accessed through the link found in the show's notes or podcast description page.